Hey everyone, and welcome back for another deep dive. You know, we love to get into the nitty-gritty of all things trending, and today it's all about cryptocurrency.
Crypto, definitely a hot topic.
Absolutely. Especially that insightful article you sent over from Exploding Topics, Top 7 Cryptocurrency Trends by Allison Zeller. Remember that one?
Yeah, from November 27th.
That's the one.
Yeah.
And get this, it predicts some pretty wild swings ahead, both positive and maybe not so positive.
Yeah, the crypto world, it's never dull, is it?
No kidding. But hey, that's why we're here, to break it all down. Ready to dive in.
Absolutely, let's do it.
All right, so first things first, the crypto market cap. It's almost back to its all-time high.
Back up to a whopping $2.66 trillion.
I mean, that's not chump change. It's serious money. What's fueling this resurgence?
Well, Bitcoin's definitely a major player.
Bitcoin. Always got to talk about Bitcoin.
Of course. It's the OG crypto, and its price has almost doubled since the beginning of the year.
Seriously?
Yeah, from about $44,000 to nearly $70,000.
Wow. So is that all thanks to the SEC finally approving those spot Bitcoin ETFs back in January?
That was definitely a game changer. You know, ETFs make investing in Bitcoin so much easier.
Right. You don't have to mess around with all those complicated exchanges. You can just buy shares through your regular broker.
Exactly. And that's opened the floodgates for a whole new wave of investors. Even the big players like BlackRock and Fidelity are managing billions in Bitcoin assets through ETFs now.
So basically, ETFs have made Bitcoin more accessible.
Absolutely. More mainstream. And then, of course, we can't forget about the Bitcoin halving event that happened back in April.
Oh, yeah. Halving. I always hear about that. But I'm still a little fuzzy on how it actually works.
Sure. So basically, every 4 years, the reward for mining Bitcoin gets cut in half.
Okay.
And that reduces the rate at which new Bitcoin enters circulation. It creates this artificial scarcity, even though demand keeps going up.
So classic supply and demand.
Yeah.
Price goes up.
Exactly. And we've seen this play out before. After the 2016 and 2020 halvings, Bitcoin saw gains of 51% and 83% respectively.
But those gains didn't happen right away, did they?
No, they unfolded over time. So the question is, will this time be different?
Right. Because Zeller's article mentions these predictions of Bitcoin hitting 77,000 by the end of this year.
And an even more mind-blowing $123,000 by the end of 2025.
But this time around, Bitcoin is much more mainstream. It's not just the early adopters anymore.
Yeah.
You've got these institutional investors jumping in. So could that lead to even more dramatic price surges?
It's definitely a possibility. Increased institutional adoption coupled with just growing global awareness of Bitcoin. It's creating a unique set of circumstances that could really fuel a significant bull run.
Okay, so Bitcoin's booming. But honestly, what's really got me fascinated is how AI is starting to play a role in the crypto space. This feels like something straight out of science fiction.
It does, doesn't it? The article highlights the emergence of these AI tokens, which are basically cryptocurrencies tied to AI projects. They kind of act like fuel for these innovative platforms.
So they're powering the next generation of AI applications. That's huge.
It is, and the market seems to agree because the value of these AI tokens has gone from $2.7 billion in 2023 to over $39 billion today.
Okay, wait, so that's like a 14-fold increase in just a year.
Exactly. It's pretty remarkable, and it just shows how much people believe in the potential of AI across all kinds of industries. Even just one example, Fetch.ai. Their FET token value skyrocketed 329% in just 1 month.
Whoa, okay, so I get that it's growing like crazy, but give me a real-world example. What are these AI tokens actually being used for?
Sure. Well, imagine a decentralized AI platform. You could use tokens to access its powerful language processing capabilities, for things like translation or content creation. That's just one way AI tokens can be used.
Yeah, I see, so they're like the key to unlock these AI superpowers.
In a way, yeah. And another example that really caught my eye is this Superintelligence Alliance formed by Fetch.ai, SingularityNet, and Ocean Protocol.
Superintelligence Alliance, and that's a name that grabs your attention.
Right. Their goal is pretty ambitious, too. They want to create this decentralized AI ecosystem that challenges the dominance of those big tech companies like Google and Microsoft.
So they're taking on the giants, huh?
Yeah.
That's brave. I mean, those companies have massive resources, and they've been working on AI for years. Can this alliance really compete?
It's a classic David versus Goliath scenario, for sure. But the idea of a decentralized AI free from the control of those big tech companies, it's appealing to a lot of people. And it's attracting a ton of interest. So it'll definitely be interesting to see how this plays out.
Yeah, definitely. It raises some big questions about the future of both AI and crypto. What happens if they become even more intertwined? What do you think?
Well, that's something we should definitely explore further, and it actually ties into the broader investment landscape, which is another trend Zeller highlights in her article.
Well, it makes me think about, 2022 and how the crypto market seemed to be imploding.
Oh, yeah. It felt like every other week there was another crypto company going bankrupt. Exactly. But now in 2024, it's a totally different story. Investor confidence has bounced back.
Really?
Yeah. Big-time crypto-related companies attracted something like almost $2 billion in funding in the last quarter of 2023 alone.
Wow.
And then February 2024 saw a 3-month high of $485 million invested in blockchain startups.
Okay, so that's a pretty clear sign that investors are still betting on crypto.
Yeah, they're seeing the potential of blockchain technology. They're not just focused on, the speculative price of Bitcoin.
Right. They're looking at the long game. And speaking of Bitcoin, what about those mining companies?
Oh, yeah. The Bitcoin miners, they're having quite a moment right now.
What do you mean?
Well, their stock values are actually outpacing Bitcoin itself.
No way. Seriously.
Yeah, seriously. Companies like Marathon, Digital, CleanSpark, and Riot Platforms, they're seeing gains of 590%, 440%, and 350% respectively.
Holy moly, those are some insane returns.
Yeah.
What's driving that? Is it just the anticipation of Bitcoin's price going up even more?
That's definitely part of it. But I think it also has to do with the increasing demand for Bitcoin mining infrastructure.
Okay, so the more people want Bitcoin, the more miners are needed to process those transactions.
Exactly. And the industry itself is becoming more professionalized, with bigger players and more sophisticated operations.
Right, so it's not just a bunch of guys in their basements anymore.
Not so much. But, there's a potential downside to this, too.
What's that?
Well, Zeller's article mentions CleanSpark acquiring 3 mining facilities in Mississippi just recently.
So it sounds like we're seeing some consolidation in the mining sector.
Yeah, it seems like the big players are starting to swallow up the smaller ones.
And does that raise any concern? I mean, doesn't that kind of go against the whole idea of decentralization?
That's a valid point. I mean,
Yeah.
could this lead to a more centralized mining landscape?
Right. What happens if a handful of companies control most of the Bitcoin mining power?
It could potentially stifle innovation or even make the network more vulnerable to attacks.
Okay, so there are some trade-offs to consider. It's not all sunshine and rainbows.
Definitely not. And speaking of potential downsides, we can't ignore the elephant in the room, regulation.
Oh yeah, regulation.
Yeah.
After the whole FTX meltdown and all those other scandals, it's clear that governments are taking a much closer look at crypto.
Absolutely. The article mentions that search interest for crypto regulation has spiked something like over 104% in recent years.
So people are definitely worried about it.
Yeah, and for good reason. And the SEC, led by Gary Gensler, they seem to be taking a particularly tough stand.
What's their approach?
Well, Gensler is basically saying that most cryptocurrencies are essentially securities.
Securities like stocks and bonds.
Exactly. And that means they should be subject to the same regulations, registration with the SEC, transparent disclosures, all that stuff.
So it's a pretty big shift from the early days of crypto, when it was all about moving fast and breaking things.
Right. But now the SEC is saying, hold on, we need some rules here.
And they're not afraid to enforce those rules.
Definitely not. Remember the lawsuits against Coinbase and Binance in 2023?
Oh yeah, Coinbase was charged with operating as an unregistered broker. And Binance had to pay a massive fine, like $4 billion.
Yeah, so the SEC is definitely sending a message. Crypto is not a lawless frontier anymore.
Right. And that message seems to be getting through because Zeller mentions how some crypto companies are actually moving overseas.
Really? They're looking for friendlier regulatory environments.
So they're kind of like crypto refugees.
In a way, yeah. Gemini, for example. They're exploring opportunities in the United Arab Emirates. And Coinbase has set up shop in Bermuda.
Wow, so they're literally packing up and moving to places where they can operate more freely.
It seems that way. And it's all because of these regulatory concerns.
So while the U.S. is cracking down, other countries are welcoming crypto with open arms.
Yeah.
It's kind of a global competition for innovation.
Yeah, exactly. And it makes you wonder, will the U.S.'s tough stance on regulation ultimately backfire?
Right. Will it stifle innovation in the U.S. and push all the best companies and talent overseas?
It's a valid concern. And it'll be interesting to see how this all plays out. But, there's another really important aspect of crypto that we haven't even touched on yet.
What's that?
It's environmental impact.
Oh, yeah. I've heard some pretty scary things about crypto's carbon footprint.
Yeah. It's not exactly known for being eco-friendly. I mean, Bitcoin mining alone uses more electricity annually than the entire Netherlands.
Seriously.
That much.
That's right. And a big part of the problem is this energy-intensive process called proof of work.
Proof of work.
Yeah. It's the mechanism that many cryptocurrencies use to verify transactions, including Bitcoin. And it involves a huge network of computers, all competing to solve complex mathematical problems.
So basically, it's a giant energy suck.
Pretty much.
Hmm.
And to make matters worse, a lot of that energy comes from fossil fuels.
Which, of course, contributes to climate change.
Exactly. UN scientists estimate that something like 67% of the energy used for Bitcoin mining comes from fossil fuels. Wow, that's pretty alarming. Especially when you consider that a single Bitcoin transaction uses as much energy as an average U.S. household consumes in 26 days.
Yeah, and it's not just the electricity consumption either. Bitcoin mining also requires massive amounts of water for cooling and humidity control.
So it's a double whammy.
Yeah, the article actually compares Bitcoin's annual water consumption to the water needs of Washington, D.C. It's a lot of water.
Okay, so it's clear that Bitcoin has some serious environmental issues, but are there any alternatives to this proof-of-work system?
Well, there are some other mechanisms like proof of stake.
Proof of stake.
Yeah, it's much more energy efficient. And Ethereum actually switched to proof of stake back in 2022
So how much did that reduce their energy consumption?
by a whopping 99%.
Wow. Okay, so proof of stake sounds like a much better option from an environmental standpoint.
It definitely is. And it's great to see some cryptocurrencies taking these steps to reduce their impact. But the big question is, will Bitcoin ever follow suit?
Because right now, it's kind of the elephant in the room when it comes to crypto and the environment.
Yeah. And unfortunately, Bitcoin is unlikely to adopt proof of stake anytime soon.
So what does that mean for the future?
Well, it means that we need to find other ways to mitigate the environmental impact of Bitcoin mining, through technological advancements or maybe even regulatory pressure.
Right, because if we want crypto to be a truly sustainable technology, we can't ignore this issue.
Exactly. And this brings up another really interesting trend that Zeller highlights in her article, the rise of asset tokenization.
Okay, tokenization. That's another one of those buzzwords I keep hearing, but I'm not sure I fully understand it.
Yeah, it can be a little confusing. So basically, tokenization involves creating digital representations of real-world assets on the blockchain.
So you're basically taking something physical like a house or a piece of art and turning it into a digital token.
Exactly. And those tokens can then be traded or exchanged on a blockchain platform.
Okay, so why is that so revolutionary?
Well, for one thing, it increases transparency and efficiency. Because all the transactions are recorded on the blockchain, it creates this immutable record that's accessible to everyone.
So it's like a public ledger that can't be tampered with.
Exactly. And that can help reduce fraud and streamline a lot of processes.
Okay, I see. And what about fractional ownership?
Oh yeah, that's another big benefit of tokenization. It allows you to divide ownership of an asset into smaller units.
So like instead of buying an entire house, I could buy a fraction of it.
Exactly. And that opens up investment opportunities to a much wider range of people because you no longer need to purchase the entire asset outright.
Okay, so it's kind of like buying shares of a company, but instead of a company, you're buying shares of a house or a painting.
Exactly. And it could potentially democratize access to assets that were previously only available to the ultra-wealthy.
That's pretty cool. And it seems like some big players are starting to catch on to this trend.
Definitely. Zeller mentions BlackRock's BUIDL fund, which is specifically focused on tokenized assets, and it's built on the Ethereum blockchain.
How much did they raise?
They raised $240 million in their first week.
Wow. So BlackRock is definitely taking this seriously.
Yeah. And Citigroup is also experimenting with tokenization on a private blockchain to speed up asset transfers.
So even the traditional financial institutions are getting on board.
Yeah, they're starting to see the potential of this technology, and the numbers are pretty mind-boggling. The article says that the market for tokenized assets could reach $9.82 billion by 2030.
Wow, that's a lot of money.
It is. And some analysts are even more bullish. They predict it could grow to $16 trillion, which is like a tenth of global GDP.
Okay, now those are some seriously big numbers.
Yeah. It suggests that tokenization could completely revolutionize how we own and manage assets in the future.
It's a lot to wrap your head around.
It is. It's a truly transformative technology. But as we're talking about the future of finance, we can't ignore the rise of central bank digital currencies, or CBDCs.
Oh yeah, CBDCs. Seems like every country's talking about launching their own digital currency these days.
It's a global phenomenon. Zeller's article says that 132 countries representing 98% of global GDP are actively researching or developing CBDCs.
Wow, so this is not just a fad.
No, it's a major trend. And I think it's important to understand what CBDCs are and how they differ from, cryptocurrencies like Bitcoin.
Yeah, because to be honest, when I hear digital currency, I immediately think of Bitcoin.
Right. But The key difference is that Bitcoin and other cryptocurrencies are decentralized.
Meaning they're not controlled by any government or financial institution?
Exactly. But CBDCs are issued and controlled by central banks.
So it's like a digital version of a country's fiat currency,
Yeah.
like the US dollar or the euro.
Exactly. But instead of being printed by the government, it's issued digitally by the central bank.
Okay, so it's basically digital cash.
Pretty much. And proponents of CBDCs argue that they offer a lot of advantages, increased efficiency, lower transaction costs, and greater financial inclusion.
It sounds like they could make the global financial system a lot smoother.
Potentially, yeah. They could streamline cross-border payments, and they could give governments new tools to implement monetary policy.
Okay, so it sounds like CBDCs have the potential to be pretty revolutionary. And some countries have already launched them, right?
Yeah. Zeller mentions Jamaica, Nigeria, and the Bahamas as examples. And China is running the world's largest pilot program with its digital yuan, the eCNY.
So it seems like the rest of the world is embracing this digital currency revolution. But what about the US? Where do we stand on all this?
That's where things get a little more complicated. While the U.S. is exploring the concept of a digital dollar, officials here seem to be a lot more hesitant than their counterparts in other countries.
Why is that?
Well, there are concerns about privacy, cybersecurity, and the potential impact on the stability of the financial system.
Right, I've read about those concerns. Some people are worried that a digital dollar could give the government too much power to track people's financial transactions.
Yeah, that's a valid concern. There are also worries that a hasty implementation could disrupt the existing banking system and create unintended consequences.
So it sounds like the U.S. is taking a more cautious approach.
Yeah, they're kind of waiting to see how things play out in other countries before fully committing to a digital dollar.
Which makes sense. I mean, it's a pretty
Yeah.
big deal.
It is. But this cautious approach also raises a question: will the U.S. fall behind in the global digital currency race?
Right. If other countries are moving ahead with CBDCs and the U.S. is dragging its feet, could that hurt our position in the global financial system?
It's definitely something to think about, and it highlights the complex and evolving nature of this whole crypto landscape.
Yeah, it really does feel like we're at a crossroads with all these new technologies and trends emerging. It's both exciting and a little bit daunting.
I know, it's a lot to take in. But that's what makes this space so fascinating. It's constantly evolving, and there are always new challenges to tackle.
Absolutely. And it's been awesome having you here to help us break it all down.
Well, thanks for having me. It's been a great conversation.
So let's just take a step back for a second and recap what we've covered today. I mean, we've talked about everything from Bitcoin's potential boom to the rise of AI tokens to the evolving investment landscape, the regulatory tug of war, the environmental concerns, the promise of asset tokenization, and of course, the looming question of CBDCs.
We've covered a lot of ground.
Yeah, it's amazing how much is happening in this space. It's mind-blowing.
It really is. And, it's constantly changing, which makes it pretty difficult to predict what's coming next.
Right. So I'm curious, given the rapid pace of change we've discussed, what other surprising crypto trends might emerge in the next couple of years? What's on your radar?
That's a great question. You know what? One thing I'm particularly interested in is how the metaverse will intersect with crypto.
Oh, yeah. The metaverse.
Yeah.
That's another one of those buzzwords that's been thrown around a lot lately.
But it's more than just a buzzword. I think it has the potential to really transform the way we interact with the digital world.
How so?
Well, we're already seeing virtual worlds and digital assets becoming more and more intertwined. And I think that convergence is only going to accelerate in the coming years.
So you're saying that crypto could become the currency of the metaverse?
In a way, yeah. I mean, imagine owning virtual real estate or digital artwork in the metaverse, all secured and verified on the blockchain. It's like a whole new economy is emerging.
Wow. That's pretty mind-blowing.
It is. And I think we'll also see more experimentation with governance and community building in the crypto space.
Okay, what do you mean by that?
Well, decentralized autonomous organizations, or DAOs, are already gaining traction.
DAOs?
Yeah, they're basically organizations that are run by code instead of people.
Seriously?
Yeah, and they're powered by blockchain technology, so they're transparent, secure, and efficient.
Okay. I'm going to have to do some more research on DAOs because that sounds fascinating.
You should. It's a really interesting concept, and I think
Right.
we're just scratching the surface of what's possible with DAOs. I mean, imagine using blockchain technology to empower communities and create new forms of digital collaboration.
Yeah, that's pretty exciting. And it shows how crypto is not just about finance, it's also about rethinking how we organize ourselves and make decisions collectively.
Exactly. It's about creating new systems and structures that are more equitable, transparent, and efficient.
And who knows what other surprising innovations will emerge as this technology continues to evolve.
Right, that's what keeps me coming back to this space. The possibilities are truly limitless.
Well said. I think that's the perfect note to end on. So I want to thank you again for joining us for this deep dive into the world of cryptocurrency. It's been a wild ride.
It has. And thanks for having me.
And a huge thank you to Allison Zeller for her insightful article on exploding topics. It gave us so much to think about and discuss.
Definitely a great read.
But remember, this is just the beginning of the crypto journey. So keep exploring, keep learning, and stay tuned for more deep dives into the ever-evolving world of cryptocurrency.
Absolutely. The future is bright.
It certainly is. All right, everyone, thanks for listening. We'll catch you next time.